Welcome to the deep dive. Today we're getting into something pretty fascinating. You brought up using computer algorithms trying to get an edge in stock trading.
Yeah, specifically looking at this source, genetic algorithms and applications for stock trading optimization.
Right. So our mission basically is to figure out how these things actually work, under the hood. And the big question, can they really give you an advantage?
And we have to talk about something fundamental right off the bat, which your source brings up the efficient market hypothesis, the EMH.
Ah, yes, the big debate.
Exactly. The idea that, stock prices already reflect everything, so beating the market consistently is impossible. Some folks really stick to that.
But others think maybe there's room for new methods, like these genetic algorithms. So where do GAs fit in?
Well, that's what we need to unpack. GAs are.
Hmm.
They're interesting because they're inspired by nature. Think Darwin's survival of the fittest.
Like evolution, but for algorithms.
Pretty much. They evolve over time to find better answers to really complex problems. So, okay, let's dig in. We'll focus on the basics of GAs from the book and then how they're used in finance, specifically for trading systems and investment strategies.
Sounds good. So let's start with that big challenge you mentioned, market efficiency. The source talks about different levels, right?
Yes, three forms. It's important context.
Okay, lay them out for us.
First, there's the weak form.
Yeah.
This basically says all the past prices, trading volumes, all that historical data, it's already baked into today's price.
So looking at charts to predict the future is useless, according to this view.
Essentially, yeah. Then you have the semi-strong form. That goes further. It says all public information, news, company reports, economic data is also already in the price.
Okay, so reading the news won't give you an edge either.
Not according to the semi-strong form. And finally, the strong form. This is the strictest. It argues even private insider information is reflected in the price.
Wow. So under that view, nobody can beat the market consistently.
That's the theory. But what's really relevant for us today is that these genetic algorithms, the ones in the book, they're specifically trying to, let's say, challenge the weak form.
Oh.
They work by analyzing exactly that historical price and volume data, looking for patterns for strategies that might actually work. It's like they're betting that maybe the past does hold some clues.
Interesting. So they're kind of sifting through the noise, looking for signals that the weak form says shouldn't be there.
Precisely. Now, the book also mentions some other related techniques, these soft computing methods. Maybe we should touch on those quickly, just for context.
Good idea. What else is out there?
Well, there are expert systems. These are rule-based, like if this happens, then do that. They've been used a bit in asset allocation, but their success really depends on how good the human experts' rules are.
So very reliant on the human input. What's next?
Fuzzy logic. Similar to expert systems, uses rules, but it allows for shades of gray. Things aren't just true or false. Better for market uncertainty, maybe?
But still depends on the rule writer.
Yeah, same limitation. And they don't really learn or adapt on their own.
Okay. What about neural networks? We hear a lot about those.
Definitely. Inspired by the brain, right. Interconnected nodes processing information, they can learn and adapt. They've been applied in finance for prediction, though maybe the initial hype was a bit much.
Right. And the last one mentioned, chaos theory. Sounds appropriate for the market.
It does, doesn't it? Chaos theory looks at complex, dynamic systems. It's more about understanding the system's behavior, its stability, rather than giving you direct trading forecasts. It needs a lot of computing power, too.
But it can be combined with GAs, the source says.
Yes, sometimes they're used together. But the key difference, getting back to GAs, is that they are fundamentally optimization techniques.
Okay, optimization. How does that differ?
They use principles from biological evolution selection, crossover, mutation, which we'll get into, to constantly improve a whole population of potential solutions. It's less about rules or pure pattern matching, more about evolving the best strategy.
All right, let's dive into that then. The mechanics. How does a GA actually, work step by step?
Okay, so it usually starts by just generating a whole bunch of random potential solutions, like initial guesses.
Completely random.
Yep, to start. These solutions are often coded as strings of characters, often just binary, zeros and ones. We call these chromosomes or genes.
Okay, so you've got this random pool of coded potential strategies. Then what?
Then, the crucial step. You need to figure out how good each one is. You use what's called a fitness function.
A fitness function, like a scoring system.
Exactly. It measures how well that particular solution solves the problem. For stock trading, maybe it measures the profit that strategy would have made historically, or its risk level.
Got it. So Higher fitness means a better strategy, historically speaking.
Yeah.
What's next after scoring them?
Selection. Based on those fitness scores, the better solutions get chosen to, well, mate.
The fittest survive and reproduce.
Kind of, yeah. The less fit ones aren't necessarily wiped out immediately, but they have a much lower chance of passing on their genes to the next generation.
Okay, so the better ones are selected. How does the mating part work in an algorithm?
That's where crossover comes in. It's like sexual reproduction. You take two selected parent solutions, pick a point in their coded strings, and swap the parts.
Swapping code segments.
Yeah. So say parent A is 11-101-01 and parent B is 001001. If you cross over after the fourth bit, you might get offspring 11-101-11 and 001-01. You're mixing traits from successful parents.
Interesting. Combining the good bits. What about mutation? Sounds a bit random.
It is. Mutation just means randomly hinting a bit here or there in a chromosome, changing a 0 to a 1 or a 1 to a 0.
Why do that?
It introduces new genetic variation. It helps the algorithm avoid getting stuck on a solution that's pretty good, but maybe not the best possible one. It's a way to keep exploring.
So recap. Random start, score them, pick the best, they swap parts, maybe a random tweak happens.
Yeah.
And then
Then you repeat the whole cycle. Evaluate the new generation, select the best, crossover, mutate. You keep doing this over many generations.
until when?
Until you reach some stopping point, maybe after a fixed number of generations, or when the solutions stop improving much, or when you find a solution that meets your target fitness. The
Yeah.
idea is that the population gets progressively better.
Okay, that makes sense conceptually. The book uses a really simple example. Fx is x with x between 0 and 31.
Yeah.
How does that illustrate things?
Right, so X can be represented by a 5-bit binary string, like 0000000 is 11 is 31. The fitness is just the value of X.
So Sol 111 is the fittest.
Exactly. So the GA starts with random 5-bit strings, and through selection, crossover, and mutation, it tries to evolve towards strings with more ones, closer to that optimal 11-111. It shows how the coding works and how fitness drives the evolution.
Gotcha. A simple way to see the process. And the crossover example you gave earlier, swapping segments.
Yeah, parent A 10110, parent B 01111. Crossover after bit 3 gives you offspring A 10101 and offspring B 010110, just combining parts.
And mutation would be just flipping one of those bits randomly.
Okay. So how does this whole GA approach compare to other search methods like calculus or just random guessing?
Well, the source points out that traditional calculus methods can struggle if the problem space is noisy or has lots of jumps, discontinuities, which financial markets often do.
Right, not smooth curves everywhere.
Exactly. And pure random search, well, it's incredibly inefficient for complex problems. You might stumble on an answer eventually, but it would take forever.
So GAs are more directed than random, but more robust than calculus for messy problems.
That's a good way to put it. The book calls GA a randomized search technique that explores many points in parallel.
And it highlights some key differences from traditional optimization.
Yes, GAs work on coded strings, not the parameters directly. They use that fitness function, needing no other system info. They search in parallel from multiple points,
Yeah.
and they're probabilistic, not deterministic.
That point about only needing the fitness function seems important. Why is that such a big deal? It makes them incredibly versatile. You don't need deep mathematical knowledge of the underlying system. As long as you can define what good looks like, the fitness function, you can potentially apply a GA. That's powerful.
So you can apply it widely because it's kind of problem agnostic as long as you can score the solution.
Pretty much, yeah. It broadens the applicability immensely.
Now, back to the biology connection. The book maps GA terms directly to biology terms. Can you give us a few examples?
Sure. The GA string is like a biological chromosome. The whole genetic code, the genotype, is like the GA's structure. The actual solution or strategy that results the phenotype in biology is the GA's parameter set, or solution alternative.
And the bits in the string.
The individual values or bits are like genes, and their position, the locus, is like the bit position. It's really a direct borrowing of concepts.
Like a computational mimicry of evolution. Okay, so if you're actually going to use a GA, what are the practical challenges? What do you need to worry about?
Several things. First, how you represent the problem that coding into strings. That takes creativity and careful thought. A bad encoding can doom the whole process.
Right. Garbage in, garbage out. Even for the encoding itself. What else?
A big one is premature convergence. This is when the population loses diversity too quickly. All the solutions start looking alike, and the algorithm gets stuck on a pretty good peak, but maybe not the best peak in the landscape.
Like finding a local optimum but missing the global one.
Exactly. Often happens if the selection process is too greedy, too focused on only the very top performers early on.
So you kill off potentially useful diversity too soon. How do you fight that?
That brings us to balancing exploration versus exploitation. You need to exploit the good solutions you found, but also keep exploring for potentially better, different ones.
Like sticking with your favorite restaurant versus trying new ones.
Good analogy. And this balance is managed through the choice of operators, crossover, and mutation in their settings, like how often you apply them.
Okay, so tuning those is key. Let's talk more about crossover and mutation. There's some debate about which is more important.
Yeah, there is. Crossover is often seen as the main engine, combining good building blocks from successful parents. Mutation is sometimes viewed as more of a background operator, just stirring the pot.
But the book says both are essential.
Absolutely. They have distinct roles. Crossover is about exploitation, refining, and combining existing good traits. Mutation is about exploration, introducing brand new genetic material, potentially jumping out of a local optimum.
So refinement versus novelty. What about the mutation rate? How much randomness do you want?
It depends. Higher rates might be needed if the solutions are getting too similar or if the problem in coding is complex, but too much mutation can just disrupt good solutions that are already forming. It's a trade-off.
And crossover's role. Preserving good patterns.
Yes, it's good at preserving and combining successful schemata or building blocks. It constructs better solutions from existing good parts. But, crucially, it doesn't invent anything totally new. And a poorly placed crossover can break up a good block.
So they really need each other. Okay, what about different ways to select the parents? The book mentions selection operators.
Right. A classic is roulette wheel selection. Imagine each solution gets a slice of a roulette wheel, sized according to its fitness. Spin the wheel, and fitter solutions have a higher chance of being picked.
Intuitive.
Yeah.
Higher fitness, better odds of reproducing. Any others?
Janitor selection is another. It ranks solutions by fitness and selects based on rank. More direct pressure towards the fittest.
And you mentioned earlier this tension between selection pressure and diversity.
Yeah, if you select too strongly, high pressure, diversity drops quickly, risking that premature convergence. If selection is too weak, progress might be too slow. You need that balance again.
Always a balancing act. Now, different types of crossover were mentioned too. Single point, 2-point, uniform. What's the deal there?
They're just different ways of swapping the genetic material. Single point cuts once and swaps tails. 2-point cuts twice and swaps the middle section.
And uniform.
Uniform crossover is more granular. It goes bit by bit, deciding randomly which parent contributes each bit to the offspring. Matrix crossover is for 2D representations.
Does the choice matter much?
It affects how thoroughly the search space is explored versus how much existing blocks are preserved. More complex crossovers tend to mix things up more.
Okay. And there are different mutation techniques too, beyond just flipping a bit.
Yes, things like inversion, reversing a segment, deletion duplication, deletion regeneration, replacing with random bits, segregation, shuffling bits, even using logical operators like AND or XOR. It's a whole toolkit for introducing variation in different ways.
A lot of options to tweak how the evolution happens. Let's quickly touch on dominance, another biology term.
Right, like in genetics where one allele gene version can mask another, in GAs you can implement similar schemes. Maybe one bit value overrides another based on a rule or based on overall fitness. Adds another layer of complexity to how the genotype string translates to the actual phenotype solution.
Okay, now what if there isn't just one best answer? What if a problem has multiple good solutions? GAs tend to find just one.
Right? Standard GAs often do, yes. They converge to a single peak. But many real-world problems are multimodal. They have several good solutions, several peaks in the fitness landscape.
So how do you find more than one?
That's where techniques for niche and speciation come in. The goal is to encourage the GA to find and maintain solutions around multiple different peaks simultaneously. Maintain diversity across different good regions.
Like finding a whole portfolio of good strategies, not just the single best one.
Exactly. The challenge, as the book notes, is you usually don't know where those peaks are beforehand. So the techniques have to encourage exploration and maintain diversity without explicit targets.
And this relates to multi-objective optimization too.
Yes, sometimes you have competing goals like maximizing profit and minimizing risk in trading. A GA can be used to find a set of Pareto optimal solutions.
Pareto optimal.
Solutions where you can't improve one objective without making another one worse. GAs can find a range of these trade-off solutions for you to choose from.
Okay, great overview of the mechanics and nuances. Let's circle back to the main event. Using GAs for stock trading. The goal is clear. Optimize trading strategies. But then there's that EMH elephant in the room again.
Right. The weak form says looking at past prices is futile, but GAs in this context are doing exactly that using technical analysis.
So they operate on the assumption that there are patterns in past data that can be exploited, flying the face of the weak EMH.
Pretty much. They analyze past prices, volume, using technical indicators, moving averages, RSI, stochastic oscillators, that kind of thing.
Tools that try to generate buy-sell signals from historical data.
Correct. And normally the parameters for these indicators, like the look-back period for a moving average, are set by traders based on experience or just trial and error.
But the GA can optimize those parameters.
That's the key application. Instead of guessing the best length for a moving average, you let the GA test thousands or millions of possibilities against historical data and find the lengths that would have worked best.
So take that moving average crossover strategy, short-term average crossing the long-term one. The GA could find the optimal number of days for both averages.
Precisely. It searches for the pair of lengths, say 10 days and 50 days or 12 and 43, whatever, that maximizes historical profit or some other fitness measure for a specific stock or market. It automates the backtesting and optimization.
That's powerful. And the book mentions using GAs for more complex rules combining multiple indicators.
Yes. Imagine a rule using signals from RSI, a moving average, and trading volume. Optimizing all the parameters for that manually would be a nightmare. The GA can search that huge combination space much more effectively.
The book even gives a sample rule using ROC, STO, OBV, PSY. Sounds complex.
It shows the potential. The GA would optimize the look-back periods and threshold levels for all those indicators simultaneously to find the best overall rule based on history.
Of course, nobody expects a 100% perfect system. So what's the realistic goal?
To find a system that shows a statistically significant edge, a reasonably high degree of accuracy or profitability when tested on historical data. Crucially, you test it on data it wasn't trained on the testing set to see if the performance holds up.
Makes sense. You need out-of-sample validation. What are some typical GA settings used for this kind of application? Population size, generations.
The source mentions examples like maybe 50 individuals in the population, run for 50 generations. Crossover probability might be high, like 0.75, and mutation rate low, maybe 0.01 or 1%. But these are just starting points. They often need tuning.
Okay, it's definitely a systematic approach to strategy optimization. Now, you mentioned GAs are used elsewhere too, not just finance. Can you give a couple of quick examples?
Sure. Music composition is a cool one. You can represent melodies or rhythms as strings, define fitness based on harmony or correlation to a style, and let the GA evolve musical pieces.
Evolving music. Wow.
What else? Chemometrics. Using GAs to optimize parameters for fitting curves to chemical analysis data, like figuring out the composition of something from its spectrum.
And database optimization.
Yeah, optimizing complex database queries, representing the query plan as a tree, and using GA operators to evolve more efficient ways to execute it.
It really shows the breadth of this evolutionary computation idea. The book also quickly mentions other nature-inspired algorithms, like swarm intelligence.
Right. That's another category inspired by social insects. Particle swarm optimization, or PSO, is a key example.
How does PSO work, briefly?
You have a swarm of particles moving in the search space. Each particle adjusts its path based on its own best found position so far, and the best position found by the entire swarm.
How does it compare to GAs?
PSO is often faster, uses less memory, as it doesn't have the same kind of crossover mutation complexity. But it might sometimes get stuck in local optima more easily than a well-tuned GA. Sometimes they're even combined, GA-PSO hybrids.
Interesting. Different tools for different optimization tasks. It really comes back to that core idea of optimization being crucial.
Absolutely. Resources are always limited. Finding the best way to do something is vital. And for complex, messy, real-world problems where simple math fails, these nature-inspired algorithms like GAs offer really valuable approaches.
Okay, so wrapping up this deep dive. Genetic algorithms, they're a unique, powerful method, borrowing from nature to tackle tough optimization problems. Stock trading is definitely one of those.
Yeah, they work by evolving populations of potential solutions, trading strategies, in our case, using selection, crossover, and mutation over generations.
And while that efficient market hypothesis is always lurking, suggesting you can't beat the market with past data,
DGAs offer a systematic way to try to find profitable strategies by optimizing technical indicators and rules based on that very historical data. It's a direct challenge to the weak form, at least.
and we shouldn't forget, this isn't just about finance. The success of GAs in music, chemistry, databases, it just shows how adaptable this core evolutionary concept is.
Definitely. Which maybe leads us to a final thought for listeners. As these algorithms get more and more sophisticated, especially with AI integration, what are the ethical considerations, particularly in finance? What does it mean for market stability, for fairness, when these incredibly powerful optimization tools are deployed?
That's a really important question to ponder. What happens when the algorithms get too good, perhaps? Something to think about.